Alright, update on Bitcoin. So we've got a few things to go through in today's Bitcoin video, but there is one thing that I did want to go through, and for this we're going to be microdosing the price gaps in the Nasdaq to try and provide some hopium to see if we could be having a dead cat bounce, at least in the short term, providing some crazy gains in the crypto market back up to our previous price gaps. Before we get into microdosing what's going on in the stock market, let's talk about the Bitcoin price. So if we look at what's going on, I mean, really not an awful lot has changed since yesterday. We are really chopping up. I told you that this would be happening before the Fed meeting. I said I don't think anyone should be getting excited. I think for the next couple of days coming into the Fed meeting, we're really just going to have chop mundane price action before we do rally out of the news on the Fed. And what I want to talk about with microdosing the price gaps on the Nasdaq very much lines up with the theory that Bitcoin could be setting up for that bounce after the Federal Reserve meeting. So if we come over to a new Bitcoin chart, first of all, like I said, if you weren't in yesterday's video, just quickly, the next Federal Reserve meeting is between the 3rd and the 4th. In my experience, especially in the past year, since all this quantitative easing has been going on, everyone has become an economist. Everyone wants to know what the inflation rates are at the Federal Reserve meetings. Everyone wants to know what the interest rates are. Before, no one cared. Now everyone seems to react to the price news on the Federal Reserve meetings. So, once again, coming into the 4th, I think it's going to be some boring price action. If we look at this, you can see we're in a broadening megaphone pattern. These are traditionally bullish. We normally break to the upside of these. And you can see, even if we just made it back up to the top, we'd be coming up to 46,000. Now, I made a price prediction on Bitcoin before we entered this bearish phase, and it still is into account. I mean, nothing necessarily has changed in terms of my price prediction. I was predicting at some point that we are going to move to the top of this channel. A lot of people think we're going to break down to lower price targets, and I'd be happy to admit I'm wrong if I am wrong on this and we do break down. I would be very, very happy to DCA, so believe me, I hope I'm wrong. I hope I'm wrong. I would love to be DCAing Bitcoin down at 34,000. I just don't think it's going to happen. That is my opinion. The Bitcoin logarithmic growth curves both agree and disagree with that, because like we updated in the previous Bitcoin logarithmic growth curve update that we did yesterday, the Bitcoin logarithmic growth curves, the price is currently sitting at the lowest Fibonacci bound that we do have on the chart. We're sitting at the Fib 0902, and that is coming in at 37,500. If we look at the Bitcoin price, it was only yesterday we were down at this region, so technically we've come down and tapped our lowest fib. Why is this important? Well, historically we always bottom on the lowest fib to the 1 deviation oversold level. 1 deviation oversold is currently sitting at 32,000, meaning, if we do potentially come down to these levels, then, a lot of the bears, or not, I don't necessarily want to say bears, because, it's when I say bears, I'm kind of joking, because, I do understand that there is a lot of validity that people could imagine we could be coming back down here. And when I say bears, I'm really just saying you're expecting a bearish move, because, I don't really... Yeah, I'm not trying to call anyone anything bad or anything, but yeah, I do think potentially the bears could be right. We could be moving down to 34,000. I'm of the opinion that we're going to move up. Obviously, no one's got a crystal ball. We're all just looking at the chart and trying to foresee what could be going on. And right now, there's nothing to see. I think we are just experiencing that chop before we do go into the Fed meeting. Now, one good thing is the Bitcoin shorts have started to subside a bit, and this is normally a good thing because it is very rare that we go on a parabolic run on the shorts while having a correction. Normally you can see we literally just go up in a straight line. Like, these parabolic bearish phases just come out of nowhere, and we're not really seeing that. Most of the time when we take our time to build up, we just break back down. It's the same all the time. The best shot we had at this was a 1-day pump, and then, like I said, you don't get that continuation, you just roll over. So it is good what we're seeing with the Bitcoin short starting to roll down. Like I said, not much to see with this broadening megaphone pattern. If we do break up, you can still see strong resistance coming in at 39,000. I'm not really bothered about these small price swings. I'm trying to put myself in a position where I can capitalize on the next big Bitcoin price swing. So we've looked at the Bitcoin chart. Like I said, there's not a lot going on right now. The total crypto market cap has recently broken below your ascending channel. Total 2, which is the altcoin market cap. It's basically the total crypto market cap minus Bitcoin. You can see this is still breaking down to the downside. Altcoins are sometimes a leading indicator for Bitcoin. So what we're seeing with the altcoin market still breaking down from this doesn't really fare too well for Bitcoin. And, you know, like we've done on the Bitcoin chart, I guess you can still connect the wicks and consider that we might just be in a bigger channel, but the point comes, you know, where do we draw the line? If we break below this, you know, can we still draw another line and say we're bullish? I don't personally think so. So I would really like to see this hold. Now, getting into the bread and butter of this video, we're going to be microdosing the price gaps on the Nasdaq. Now, why would we do this? Now, first of all, a lot of people are probably used to the price gaps on Bitcoin. I don't think they're going to show on this chart because I don't have the stock market Bitcoin ETF. But if you don't know, the markets, or the stock market should I say, don't trade over the weekend. So we have these price gaps when you look at Bitcoin when you're looking at it on a stock market ETF derivative. So for example, it was Saturday and Sunday just 2 days ago. So it's Monday now. The price on Monday opened here, and the price on Sunday shut here. So, you know, convincingly this time there is not really a gap. But in theory, let's say it was Sunday up here and the price closed all the way up here, and for some reason it's Monday down here. It takes 5 days to get to Monday now. There would be a price gap between these two regions, and normally with these price gaps the price either moves up or down into the price gap to fill it. And often it's very similar with the Nasdaq. I used to look at this all the time when I used to trade stocks, but I don't trade stocks anymore. I trade crypto. I just look at the stock market as a leading indicator of what is going on with crypto. So first of all, let's highlight a bunch of regions where we can identify gaps, and then we'll see if they were filled. Well, first of all, this gap I would consider filled because, you know, we opened the gap and then we wicked down straight into it. So this was confirmation that this was a successful gap. Now, I'll mark the successful gaps green, and I'll mark the unsuccessful / unfilled gaps. You can't really see them with red, so let's mark them purple. Purple, and then we obviously know that green is the successful color anyway. So yeah, that's the only caveat of this. Let's mark this green, and let's go through. I don't want to take, you know, 20 minutes going through every single time, but I will just do my best. If I do miss one, then I do apologize. But here you can see this was another very minor price gap that did successfully get broken down to. So you can see we had a gap here, we broke right back down to it within a couple of days. You can see we have a price gap right here. We were down and we had a wick into it. So this was a successful price gap. Right here you can see we broke down, and then technically we had a price wick above it again. We had a price gap and a price gap, but then, you know, we broke down and then the wick closed both of these gaps. So once again, this was another successful gap. This was another successful gap. We gapped and then had a wick back up to it. If I zoom out a little bit further, let's see, how many more have we got? We've got a gap here, and as you can see, we gapped up all the way up here, broke down immediately to fill the gap. Another successful gap. I want to make sure that I'm not missing any gaps, so I don't seem like I'm cherry picking the data. I'm probably just eyeballing it bad. But yeah, you can see another gap here that, you know, once again, proved my point, came right back down and filled it. So it seems like our hypothesis of these gaps being filled predominantly does seem to work, and I'm only going to do a few more. I don't want to take too much time. You can see we broke down, filled the gap. We had another gap here. We broke down, filled the gap later on. Oh, we had a gap here. I didn't notice this. Did we fill this gap? Let's see. Yes, we did. So if you can see the price was here, 1476. We broke down. We technically gapped below the gap and then wicked back up to fill this gap. So this was another successful gap. So far, it seems like every single gap that we've looked at fills our narrative. Now, I almost want to find one that doesn't fit our narrative, just so I feel like I'm not cherry picking the data. But the more I go back, the more you can see these gaps do just get filled. This was another gap that got filled later on. This was a gap. Let's see, did this get filled? So the gap happened at this moment in time. We came back to the price action. So that was another successful gap filled. This was another successful gap. You can see we gapped up, came back down later and filled it. And then you've got, this was a gap as well. I think we just drew a trend line. Oh yeah, you can see I don't need to zoom back, because if you see, you can see these very thin lines on the screen, meaning this is where the price is at now. So we actually broke back down and filled this price gap. And then everything here, you can see these price gaps. We've got 1, 2, 3 here. So we had 3 price gaps moving up. We came down and filled every single price gap. So like I said, I do not want to make this a 10-hour long video where we go through the past 5 years worth of data, but you can see we've drawn 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 price gaps so far. And out of all the ones we've drawn in the short term, let me just, yeah, I mean, these didn't come back up and get filled. We almost wicked. We wicked into this gap, like right here. You can see we've got a wick, but we did not wick all the way up to the top here. So I will consider that a gap attempt unsuccessfully. So far, we've drawn 20 data points for evidence of our hypothesis that the Nasdaq does genuinely fill these price gaps. Out of our 20 examples, 2 of them have not been filled at this moment in time, meaning that drawing from our population sample, only 10% of the time we do not close the gaps. And like I said, I imagine if we incorporate more data, you could actually see that this is probably filled a lot more. For example, another gap here you can see filled, another one here filled, another one here, another one here filled, another one here filled, another one here filled. So I'm sure if we went through the past couple of months, we would find that it is often a lot greater than a 90% likelihood that we do break up. So it does seem likely that the Nasdaq could at least, I'm not saying enter a bullish bull run, I'm not saying the Nasdaq's going to reverse because there's a price gap and we're going to go into price discovery and, you know, new Nasdaq all-time highs within the next couple of months or so. I am simply saying that you zoom out, you can see you've got price gaps. You fall like a rock. Look, you have these bounces, you fill the price gaps, right? You come back down, you make more price gaps. So we had a price gap. Oh no, we filled this one. So we filled this price gap. These price gaps were filled as well. But then, like I said, you know, you've got a breakdown. We break up. I wouldn't be surprised if we broke down. We've already broken down. I wouldn't be surprised if maybe we went a tiny bit further down and then filled these gaps later on. Or alternatively, we could just get out of here, because these bottoms that we're currently putting in right now, depending on, yeah, there's really no way you can draw this to make it look like we haven't broken down, because we did break down below tomorrow. I mean, yesterday, not tomorrow. But nonetheless, we've come down. We could potentially be triple bottoming for the Nasdaq. I would really like to see this happen. And this would kind of line up, you know, this could be saying that we could be having a 13% rally in the Nasdaq. Now, let's look at the last time the Nasdaq rallied and let's compare it to the move that Bitcoin did. So the Nasdaq rallied on the 14th of March and it went up over about a week and a half, up 17%. So the 14th of March, what did Bitcoin do? We're on the daily time frame. 14th of March. Wow, we were all the way back down here. So you can see the Nasdaq continued its rally, which was a lower high and a dead cat bounce. And, you know, while this wasn't a lower high, I guess you could argue this was potentially a macro dead cat bounce, because, well, not a dead cat bounce. Dead cat bounce is not the right word to use. Although is it? Because I mean, technically, the more you zoom out, you would kind of classify that a dead cat bounce if you've dropped like boom, and then you've gone like boom, 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 and just bounced a few times as you've fallen off a cliff or whatever you call it. But yeah, the point of the matter is, the last time the Nasdaq rallied like this, it was almost 20% on the 14th of March. We rallied up very, very nicely. While it was a lower high, this still allowed enough momentum for Bitcoin to carry up a 27% move. So if you have watched my past couple of videos, you know that I have, well, you know, a week or so ago, I outlined the possibility that Bitcoin could have a rally up to the 49,000 region. This is a 29% increase, very similar to, you know, what we did over here, the 25% increase when the Nasdaq started rallying. So if this hypothesis is going to be correct, and the Nasdaq is going to rally and fill the previous price gaps, then we could definitely see Bitcoin not have a macro reversal, but we could have a short-term reversal back up to as high as 49 to 50,000 before we do come back down and sweep the lows one last time. And by sweep the lows, I mean one of two things. We're either going to come back down, make a higher low, and then we'll get out of here, or we'll come up, make a, you know, come up to our 50,000, break down to your 34,000 to 30 to 28,000, which is my worst case scenario, absolutely worst case scenario, which I do not think will happen, but we need to be open. It's not 100% unlikely that it could happen. We could break down to these price targets. So either way, I do think there is a very good chance that the Nasdaq and the stock market could rally. Let's see what the rest of the stock market is doing before we wrap up this video. If we look at Tesla, Tesla's having a nice pump, but it is coming back into this resistance. Coinbase is having a nice pump, but once again, you know, you've still got the bearish engulfing candle from yesterday. Decent amount of volume. You'd really want to see some continuation on this. Facebook having a nice, yeah, this is a nice rally, especially after the quarterly earnings increase. We've continued to rally, so I think this rallied, what was it, 18 or 25? I think it was 18%. Yeah, it rallied 18% approximately due to its quarterly earnings report, and we're getting continuation from this. So I really do like what we're seeing right now. The dollar, that is your only problem. The dollar is coming up to that point where this absolutely needs to be the triple top, because you come in, you can see, you know, one top, two tops, three tops. We've already broken above the trend line that previously defined the triple top, or the double top at the time, should I say. And then this trend line defines the top of the second peak at 103. This trend line defines the top of the peak in the highs of 103.8. And we're coming up to that level. We've got a green, red, green formation. Like I said, I always try and be as unbiased as possible in my analysis. I do not want the dollar to do well. However, I'm looking at the dollar objectively, and the dollar looks exceptionally bullish. I mean, imagine if this is what Bitcoin was doing right now. Imagine if, you know, this is where we topped at like 60,000 Bitcoin, and then this is when we came to 69,000. And then we just entered that rally, and this was like hundreds of thousands, 150,000, 200,000. That's what the dollar looks like. The dollar looks incredibly strong right now. I do think the top is near. We do just need to be careful. So we went through the update on the Bitcoin logarithmic growth curves. We haven't checked out the Fear and Greed Index. The Fear and Greed Index is now up in fear. It has fallen out of extreme fear, sitting in 28 right now. I think this has moved very, very quickly up to the upside, considering we really haven't moved too much. But that is all I've got for Bitcoin. Like I said, I did just want to microdose and do a slightly different type of video. I do enjoy doing these different types of videos where we, you know, formulate a hypothesis, we check out the markets, we check out the, you know, different types of markets to formulate opinions, different types of opinions based on different perspectives that we don't always look at, to give us a general overview of what is going on in Bitcoin. I really enjoy liking these videos. I enjoy making them a lot more than just the regular, you know, 4 or 5 minute, this is what's going on in Bitcoin update. I like exploring these alternate theories. I feel like it definitely does help to get a very big brain gauge on what is going on with the markets and what makes these markets move. So let me know if you want to see more of these types of content below. I really do enjoy making these, so the best way to let me know that you do enjoy watching these as well is just leave a like and a comment below. Let me know you want more of them. That's all I ask for. As always, none of this is financial advice. It is just my opinion on the market. Hope you enjoyed the video. Cowboy out. Peace.